Now, let's proceed to the treasury shares. So, treasury shares or the treasury stocks, these are an entity's own shares that were previously issued. So, nabaligyan na siya pero gipalit og balik. They are subsequently reacquired but they are not retired. Under the corporation code, an entity may reacquire its previously issued shares only if it has sufficient unrestricted retained earnings. So what is the accounting for treasury shares? We are using the cost method for accounting the treasury share transaction. So under this method, reacquisition and subsequent reissuance of treasury shares are recognized and derecognized respectively at cost. So these are the entries for treasury share transactions. So if we buy the shares, so we debit treasury shares and we credit cash or cash in bank. Then if we reissue, so ibalik yan ako natog balik. So ang balik taha sa treasury shares, nabaligyan na nato siya. Unya ato siyang gipalit og balik. So katong pagpalit natog balik mo ni siya tong acquisition. Unya pag human natog palit, ato na sad siyang gibaligya. So reissuance na po, reissuance of the treasury shares. So if it is at above sa cost ani niya pag-acquire nato. So magdebit ta og cash or cash in bank and we close the treasury shares at cost and the excess of the consideration received and the cost of the treasury shares will be credited to share premium treasury shares. What if we reissue the treasury share at below cost? Pwede di ma'am nga below cost kato laging ganiha kay ang par value kay magbaligya ta kay dapat dili below par value. So lahi man to siya kay par value man to siya. Ang treasury share kay cost method man ang gigamit. So whenever we buy the shares we issued, so it will be recorded at cost. So pwede siyang mabaligya, ma-reissue ang treasury shares below cost. So, what is the rule if it is below cost? So, normally, kung below cost ang atong pagbaligya, mas gamay ang cash nga na-receive kumpara sa cost sa treasury, di ba? So, naay alkansi, di ba? Nya, unsa man nga alkansi, loss ba ni siya on the sale of the treasury shares? The answer is no. It's not a loss, but we will charge it to the following according to priority. If there is an existing share premium treasury shares na sila share premium treasury shares nga balance, adto na to unang i-apply tong difference sa consideration o sa cost sa treasury shares. Kung kayang cover ni share premium treasury share ang difference, so siya ra imuhang i-debit, kana lang account ang i-debit. Pero kung kulang ang share premium or wala gyud share premium sa treasury shares, so adto na to i-charge sa retained earnings. What if ma'am na share premium pero sa ordinary share siya or sa preference share, pwede ba nako siyang gamiton? The answer is no. Dili siya pwede. Kung wala siya treasury share nga share premium, adto ka sa retained earnings, mag-charge sa difference. Dili pwede nga share premium sa lain nga transaction. Dapat share premium treasury shares. What if ang kulang ang treasury shares? So again, ang kulang or ang kitahin kuha nato sa difference is dili enough si share premium treasury shares, sawon siya sa retained earnings. So here's an example for the accounting for treasury shares. So we have the given here. And then on July 1, ABC reacquires 1,000 shares at 90 pesos. So debit treasury shares, 90. Credit cash, 90. Then retained earnings unappropriated and credit retained earnings appropriated. Ma'am, pwede din na to paliton siya nga below sa par value? Yes, if that is a treasury share. Next, what if we resell this share? Gibaligyan na sa nato at cost. So on September 1, ABC reissues the 1,000 treasury shares at cost. So debit cash, that's 1,000 times 90, and credit treasury shares, 90,000. Then, what we're going to do is we will reverse the retained earnings. Diba? Previously, debit na to ang unappropriated, credit ang appropriated. So, kanibalihon, i-reverse lang na to siya. Case 2, what if we reissue it at more than cost? So, on September 1, ABC reissues the 1,000 treasury shares at 140. So, debit, cash, 140,000. So, multiply lang siya. Then, credit treasury shares at cost, which is 90. And the balancing figure is share premium treasury shares or share premium treasury. Then, we're going to reverse the entry. Equivalent to 90,000 gihapon. Sa cost gihapon sa treasury shares. What if we reissue it below cost? So, on September 1, instead of 90, we sold it at 60. So, alkansi, kintahay, di ba? Alkansi siya. So, we have cash is 60,000 and the treasury shares credited is 90,000. So, the balancing figure is on the debit side. But, since kulang ang wala tay ka ng share premium treasury shares, kanili ay ma'am, sa din siya, this is related to the share capital. So, since wala tay share premium for treasury, then ang ato ang difference would be charged to retain earnings. And again, we're going to reverse the entry for the appropriation. So, debit retain earnings appropriated, credit retain earnings unappropriated. What if we retire the shares? Okay, so if we retire the shares, it depends if it is below original issuance or above original issuance. If it is below the original issuance price, so we have debit share capital at par or stated value, debit share premium original issuance, and then credit treasury shares, and then credit share premium retirement. If the retirement is above original issuance price, so we debit share capital, debit share premium original issuance, then debit share premium, this is the first priority, treasury shares. Again, if daily enough or wala siya share premium treasury, then we charge it against retained earnings. Then credit treasury shares or cash in bank. So here's the given. This time na siya share premium treasury. So retirement cost at less than original issuance price. So ABC reacquires 1,000 shares at 80 per share on July 1 and then retires them on September 1, 20x1. So on July 1, debit treasury shares, credit cash, and debit retained earnings unappropriated and credit retained earnings appropriated. On retirement, so we debit share capital, so we close the 1,000 shares with 100 par value, that's 100,000. Then we have share premium original issuance. And how do we get this 20,000? So we have the total share premium is 160,000. We divide it by the number of shares. That's 800,000 divided by 100 pesos. So that's 8,000 shares. So therefore, per share na ay share premium nga 20. Or pwede sa ninyong buhaton is kung mo ang proportion, 1,000 over 8,000 times 160. And you will get 20,000. Again, 1,000 over 8,000 total number of shares times 160,000. And that would be 20,000 pesos. So, unahon ginan siya og close. Okay, dili ni siya balancing figure ha, nga pag naay kulang, ani na to i-charge. Dili, magkuyog jud na sila. Kung mag-close to sa capital, sa share capital, dapat i-close po na to ang kauban niya nga share premium. The same logic with accumulated depreciation, di ba nga, whenever we retire or we sell the PPE, dapat i-close na to ang accumulated depreciation. Onya, parehas po na siya ng investment in equity securities nga naa siya unrealized gain or loss sa OCI, di ba? I-close na to ang unrealized gain or loss whenever we dispose the equity securities. So, parehas na siya. Dapat mag-uban sila. Dili pwede nga si share capital lang ang i-close. Dapat kuhaon sa nato ang portion sa share premium attributed to the retired shares. And then, we credit treasury shares 80,000. Unya, ang balancing figure nasa debit na siya or nasa credit, depende na siya sa transaction. So, since in this case, ang balancing figure kay nasa credit side, so therefore, share premium retirement. Then, of course, we're going to close the retained earnings. Okay? Retained earnings appropriated. Next is what if the retirement cost is greater than original issuance price? Mas ako taog nagasto para i-retire ang shares. So, on July 1, there are 1,000 shares that were issued at 140 per share. And then on July 1 is immediately retire. Gi-retire dayon. So on September 1, okay, sorry. On July 1 din siya. Okay, for a while ha. So what if the retirement cost is greater than the original issuance price? So on July 1, ABC Company reacquires 1,000 shares, this time at 140 per share, but immediately retires them. So, gipalit niya, o niya gi-retire. So, therefore, gibayaran niya ang share, pero gi-close rapod gihapon niya. So, the entry would be debit share capital for the number of shares times the par value, that's 100,000. Again, pag mag-close to sa share capital, dapat i-close na to iyaha. Kauban nga share premium, that's 20,000. So we already computed it earlier. Then we have the share premium. Okay, before that, we credit cash because we reacquired man the shares. So 1,000 times 140. We will no longer credit the treasury shares just like the previous one. So dire, asam to siya. Diba? Okay. Diba? In this entry, diba? We bought the treasury shares and then we credit the treasury shares upon retirement. But since in this problem, same date lang ang iyahang retirement, gipalit o niya gi-retire, so credit to cash lang ta. Wala naman tong treasury shares ma-close man gihapon. So credit na siya cash 140,000. And ang balancing figure is on the debit side. So 120 diri and then credit 140. So na-balance nga 20,000. So asa nato na siya i-allocate. So the rule is first we need to allocate it to any existing balance of the share premium treasury na may 5,000, so i-charge na to una sa 5,000. And the remaining amount would be charged against the retained earnings. Okay? Again, what if ma'am wala ning share premium treasury? So therefore, i-charge tanan sa retained earnings. Okay? Then we have stock rights and donated capital. So stock rights are issued to existing ordinary shareholders in relation to their preemptive rights. So the rights will give them the privilege or the right to buy more shares. So the stock rights enable existing shareholders to protect their current ownership interests by acquiring new shares issued by the corporation before such shares are offered to new investors. Stock rights are recorded through memo entry only because stock rights are issued to existing shareholders without consideration. An entry is made only when the rights are exercised or recalled. Then, donated capital. Okay, so what are donated capital? So, donated capital arises from gifts received by the corporation from non-reciprocal transactions. So, they arise from the following: donation from shareholders, and these are credited to share premium and recognized directly in equity. Then, it could be from the government, and these are recognized as government grants. And we have donation from other sources. So these are recognized as income. Therefore, in the profit or loss, when conditions attached to the donation are fulfilled or reasonably expected to be fulfilled, the donation becomes receivable and the criteria for asset recognition is met. So what are the forms of donated capital? So it could be cash, non-cash assets, or entities' own shares. So if it is in the form of cash, it is recognized at the amount of cash received or receivable. If it is non-cash asset, it is equivalent to the fair value of the non-cash assets. If it is entity's own share, it will be recorded only through memo entry. Then the donated capital is recognized only when the donated shares are reissued. This is because no asset is generated from the donated shares until they are reissued. So kung mabaligya lang ang share, ay hapatamaga maog entry. Example, we have for cash and non-cash donations from shareholders. ABC Company received cash of 100,000 and a land with fair value of 500,000 and historical cost of 300,000 from a shareholder. No conditions are attached to the donation. So the journal entry would be debit to cash. So, di ba, cash will be at the amount of cash received. Land is equivalent to the fair value of the non-cash asset. And credit share premium donated capital, 600,000. What if the donation is in the form of shares from the shareholders? So, ABC Company received 1,000 shares with par value of 100 and fair value of 120 per share from a shareholder as donation. So at the receipt of the shares, we will prepare only a memo entry. For example, receive 1,000 shares with par value of 100 from a shareholder as donation. When the shares are subsequently reissued, this time at 130 per share, that's the time we're going to prepare an entry. So debit cash, 1,000 times 130 and credit share premium donated capital. So ma-disregard running fair value ani kay depende man siya kung pila ang mahalin or pila man ang halin adto nga pag reissue sa donated shares. Okay? So that is the last part, I guess, for the share capital and the treasury shares and the share premium. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.